Good afternoon, actually, good morning still for some of you. And welcome today to Trading Flag Patterns, another great webcast from Schwab Coaching. Thanks for joining me. We're going to get into this discussion here really quickly, but I'm joined out there in the chat by my good friend, Connie Hill, who's a great educator and just a good all-around person. She's going to be helping to answer your questions out there in the chat today. And speaking of questions, the question is, with the market moving the way that it's been moving, do we have some flag patterns that are moving as well? So we'll see if that is the case. And then maybe we'll have time to do a little turkey trot since we are ahead of Thanksgiving. We're going to jump into that discussion here really quickly. A couple of things that we want to take care of and we want to make sure that you're aware of. A couple of housekeeping items. Remember that everything we talk about simply for illustrative and educational purposes is not a recommendation or any kind of an endorsement of any particular security or pattern or strategy. Remember that options carry a high level of risk. None of those options, or they are not suitable for all investors. Make sure that you're aware of the characteristics and risks of standardized options before considering any option strategy. Also, remember that spread trading must be done in a margin account. Multiple leg option strategy will involve multiple transaction costs. And since we're going to talk about technical analysis today, kind of by necessity, because we're talking about bull flags and bear flags, remember that Schwab does not recommend the use of technical analysis as the sole means of investment research. All methods of analyzing the market are theoretical in nature, and none of those are guaranteed. Also, remember, we're going to be using the Thinkorswim desktop software platform today, specifically the Paper Money platform, and it's a great learning environment. It is not, however, a guarantee of future success out there in the real world. There is potential to lose money in the market. Future results or past performance does not guarantee future results. Hey, one other thing to think about, we may talk a little bit about stop orders today, stop limit orders. Remember, in the event of a stop order or a stop limit order, you can specify the activation price, but not the execution price. And in the event of a stop limit order, there's no guarantee that the order will even fill if the price of the stock moves around that stop limit area. Also, as always, past performance, no guarantee of future results. Hey, so here's what we're going to talk a little bit about today. We've got a very bullish market, at least at the outset. We've got the SPX moving higher. We've got the NASDAQ moving higher. A little bit of weakness, perhaps, in the short term in the Russell and the Dow. We'll take a look at that here in just a second. But a fair number of bull flag opportunities presenting themselves in terms of example illustrations today of this bull flag pattern. But I just wanted to make sure that we're aware of the anatomy, if you will, the characteristics of the makeup of a bull flag, because I get this question fairly often, and it comes up as we're starting to go through this. I know a number of you are regular, frequent flyers in this webcast. I've met some of you in person. If you were down in Miami, I met some of you. But one of the questions that comes up is, well, what's a bear flag? Or what's a bull flag? What's a flag pattern? And how do we know? And if it doesn't look exactly like that, is it a flag? And I think realistically, we start to look at this and we kind of have to be a little bit fuzzy about how flag patterns are created, right? Flags are generally strong impulse moves in one direction or the other. Bull flag would be an impulse move to the upside, and then a little bit of a pullback, and then a move in that existing direction, right? So generally we think of these being continuation patterns coming as a construct of kind of a longer term trend. They don't always. They can be breakout moves or reversal moves, but oftentimes they're secondary to some sort of bottoming pattern that then takes us into a new trend. But the flag construction itself is generally this. Don't get too wrapped up around the idea that just because it doesn't meet exactly these numbers, like 3 to 5 days or 7 days to the upside, or 5-day pullback or a 3-day pullback, that it is not a flag, because it is a flag. So flag-like equals flag as well. So we're going to see that in this discussion today. And we're also going to kind of scan around and see how we might go about the possibility of finding flags. So as we do this, here really quickly. I'm going to come back over and kill those annotations, and we're going to switch over to the Thinkorswim desktop software platform. And as I do this is a good opportunity to remind you to click on that subscribe button down at the bottom of the page. And that's going to keep you connected to the Trader Talks webcasts community. Good opportunity to do that right now. It's at no cost to you, so click on that. So Art Vandelay says something interesting, and I love this. It says, every time I'm going to get into a trade, a bull flag turns into a bear flag. Okay, so I think that's a fair question, right? When is a flag, or when does the flag start moving in an opposite direction? So we'll explore that idea. So let's keep that in mind as we go through this discussion. But I want to take a look here really quickly at the SPX, and I want to see what's going on. We see that stronger upward movement. And we talked about this morning. If you were in the Trader Talks webcast with me this morning, we talked a little bit about some of the strength that was going on in the market. We see that RSI moving higher in the SPX. So the broad market kind of making that move to the upside. The NASDAQ doing something similar, although it's backed off just a little bit from where it was earlier. But we still see the RSI advancing. So we see some upward sentiment and momentum kind of pushing this, maybe price lagging a little bit, getting a little bit of a spinning top at the moment. But the Russell 2000, the small caps, kind of seeing that little bit of a pullback. Now, here's the thing. If we were going to compare this type of view, and I'll just zoom in on this so we can see it, this type of view to this type of view, and I'll just zoom in so that we can see this, right? So we might argue that this is kind of the after effect of a short-term bull flag that's kind of reached that previous resistance, whereas the Russell 2000 in this particular case maybe reaching that resistance level or perhaps just a little bit beyond it, but now maybe is starting to set itself up for another type of bull flag, right? So a run up and then that little bit of a pullback down towards perhaps a support level. So which one's closer to being a flag? That's a good question. I don't know. As we walk through this and as we start to see the individual stocks, a lot of that movement in the individual stocks is dictated by what the market as a whole is doing. So, it's a kind of rising tide lifts or drops all boats, if you will. So a rising flag in an index tends to create rising flags or be a function of rising flags in individual stocks within that index. And so when we start to see something like this happening, that's when we maybe go looking for some of those opportunities within those small caps or within those large caps, right? Yeah, you're right. See, it could be a flag. It could be the second peak of a double top here on the SPX. Absolutely. Russell 2000, same thing. So the question that I might ask is, well, when would we know, right? When would we know if this is going to be the second peak of a double top? And the only way that we would know that is if, in fact, price broke below kind of the apex of that pullback. So what that tells you is that those levels of support and resistance in flags and double top patterns and both continuation and reversal patterns become significantly important levels. So we're bouncing down from one of those resistance levels here on the Russell 2000. We're knocking on the door of one on the S&P 500. So we've probably got some potential for flags in both places. So a couple of places that I want to look as we get into this discussion. I want to take a look at some of the large caps and kind of crossing over from the broad market to the NASDAQ as well. So what I'm going to do in this case is I'm going to change my grid here really quickly to my single grid. And a lot of you know this single grid. We looked at this morning. This is kind of my sandbox that I use to play in, and then I can branch off of here and we can put studies on here and stuff that you might want to put on here. And so we're going to look at, first of all, Amazon, AMZN. So this is, since it is, just before Christmas, we're in that Black Friday kind of time frame. I know that they're doing their Black Friday sales as well as many other stocks are doing Black Friday sales. Maybe starting to see a little bit of a move to the upside here. And I saw this as kind of a fairly clear example of a breakout in a bull flag type of pattern, but that's following in the very much shorter term little bit of a bull flag here that occurred about a week or so ago. Speaking of occurrences, we've got an occurrence of a feedback survey out there in the chat. Connie's going to pin that to the top of the chat for me so that you can get to it and you can find it. She'll copy that in there again a couple of times. But if you wouldn't mind taking just a minute to fill that out, and you can do it this way. You can click on that link and then set that window aside, and you can come back to it later. Or you can wait and you can fill it out at the end of the class. But you run the risk, if you do that, of missing out on being able to fill out the survey. And this is how we make these sessions better, is with those feedback surveys. So help us out with that if you wouldn't mind. Fill out that feedback survey and let us know. A lot of the things that you see in this particular webcast, as well as others, come directly from the comments that viewers like you make in those feedback surveys. So we do pay attention, we read those, and we use those to hopefully make these sessions better. So let's kind of draw this out on Amazon as we see this move to the upside and this little bit of a breakout today. So what I was looking at in terms of this movement, in terms of a flag pattern, kind of that big impulse move, that big impulse move I can trace kind of all the way back down to this support level here at the 181 mark or so. And I'm just going to draw that line right up to the top. Now, we could have done it right to there, but we saw that little bit of a pullback and then the bounce, and we saw that kind of second order, that kind of shorter term bull flag. We saw that rally up, a little bit of a pullback and the rally up. And it made it to a target, maybe not to the full extent of the target of the bull flag, but we've got kind of a longer term perspective going on here. In fact, we could probably even switch this to a weekly chart and see that kind of flag pattern developing itself here, maybe even a little more clearly, right? So if we're looking at this on a weekly chart, each one of these bars representing 1 week of time, not only do we have a bull flag entry kind of building itself here on the daily chart, but we also have that entry signal that exists here on the weekly chart. Now, to be fair, this week has not closed, so we can't say this is where the week is ending. We don't have an entry yet necessarily if we're waiting for the close of the week. We'd have to wait a little bit longer. But the rest of the week is likely to be relatively low volume. It's likely to be fairly quiet volatility-wise, although low volume, low volatility can oftentimes beget big volatility or big movement when there aren't a lot of other traders around to absorb those movements. So I'm going to pop this back down to a 1 year daily chart. We'll take a look at that daily perspective. We'll kind of zoom in here so we can say, all right, here's our flag pullback back down to this support level, right? And it's built this level right down to that 196. So some traders might be saying, you know what, that's not a flag. I mean, it's kind of unconsolidated. It's kind of uncharacteristic. We see it maybe kind of being a little bit messy here. Maybe it's pulled back too far. And so that's where we might kind of jump in here and start to take a look at some of the other tools that we've looked at before in terms of looking at flag types of patterns. So what I'm going to do is I'm going to grab my Fibonacci tool here off the drawing tools. And we're going to say, all right, you know what? That's the top of the move. That's the bottom of the move. So if that's 0, you know what I'm going to do is I'm going to just draw this from top to bottom. We're going to go to the top of the move and say that's 100. We're going to go to the bottom of the move and say that's 0. And where is this pulled back to? Right about the 50% level. Now, I don't want to say that a flag can't pull back more than 50%, but generally if we see flag pull back more than that 50% or significantly more than that 50%, maybe down, as much as 75% or so of that initial move, that big flagpole run, oftentimes it'll fail. And that's simply from the standpoint that it maybe is reflective of more weakness in terms of that pullback. That pullback has more legs to it. This is pulled back kind of right onto that 50% level, give or take a little bit. And my perspective on things like levels of support and resistance, that they are drawn with big fat magic markers, not big fine line pens. So I'm not going to get too wrapped around the axle that this didn't hit exactly at the 50% level. This is close enough, right? We're not talking 6 significant digits of precision here. So that bounce happens. We get the bounce yesterday. We get the bounce continuation today with another little bit of a gap up and run. So now, if we're looking at this as a trade, we kind of have that clear air in terms of this movement to the upside that may allow for a trader to make a decision to enter the trade. I'm not saying that you should or shouldn't. We don't make those recommendations, right? But if we're looking for some kind of signal, we've got to bounce up off the support level. We've got a clear evidence and indication of that. If this is our low day right here, that candle right there, we now have a trade above, not yet necessarily a close above the high of that low day. We have a trade above the high of the low day, which is this candle today trading above the high of that low candle right there, meaning the candle that had the lowest low in that pullback pattern. We're now trading above the high of that day and trading pretty significantly above the high of that day. So there are some other confirming factors that we could put into this mix. I'm going to go to the flask icon up here on the top, and I'm going to put in here RSI, Relative Strength Index. We talked a little bit about this morning in the discussion in Trader Talks about relative strength. We're going to click on Apply and OK, and here's what I see happening. I see the RSI making a higher high in the short term. It's kind of breaking out of that sideways to downward trend that it had been in. Let me grab my line tools. Nope, I don't want to do that. I'm going to grab my trend line tool here. We'll draw that line tool kind of across here. It's kind of splitting hairs. Again, I'm not going to be too particular, not too precise, but I can see that the RSI kind of advancing above that level, just barely, but giving us some strength in and confirmation in this move to the upside. So that would suggest that maybe this is an entry signal. So now we need to know, what are we going to do with this, right? What are we going to do to take advantage of this particular scenario? Are we going to get into the trade and we're going to trade it to a target? Are we going to let it continue to run like a trend trade? And where are we going to potentially put some sort of protection on this trade in terms of that movement? So we could do a couple of different things here. We could take this line that we've drawn, that diagonal trend line, which was arbitrarily drawn, and we could go, all right, fine, let's duplicate that trend line, and let's take that dupe of that trend line. We'll come off of that low, and we'll pop it up here, and we'll kind of zoom out, and we'll say, oh, look, that might be our target up here around 231. If I look at where my Fibonacci extension is in terms of a target, which is absolutely another way that a trader could set a potential target here on a bull flag type of trade, that might put that target out here around that 237 mark. Okay. So what that also suggests is that maybe the truth lies somewhere in the middle, and not necessarily the truth, but a potential target. We might split the difference there and call it 235, right? Kind of in the middle of those two levels, that 235 mark. Yeah, so SimArchitect says, is it wise to set up something like a strangle in those situations where we don't know if it will go down or up, but it's less likely to stay at the same price for too long? So a strangle assumes a move one way or the other, right? You got to just have a move beyond a particular range. A straddle, on the other hand, assumes price staying within a range, right? Within a particular area. So strangle says, look, I don't care which way it moves, up or down, I just want it to move. And you can certainly do that. The predominance here, though, I think when we start to look at things like straddles and strangles, is that they typically tend to be trend agnostic. They're just looking for a move, right? They're not looking for a directional move. But in a situation like this, where we've got some kind of trend input that maybe is giving us a particular directional bias, then that might suggest that upward movement. So that's something that we might want to pay attention to. So now, here's the thing, and Philip asks a great question. We're going to go down this road and talking about options, so we might as well kind of break the ice here with this. So Philip says, if 235 is the target, could that be the strike price for an options contract? If we're going to use 235 as our strike price, and we'll trade this as a stock and we'll trade it as an option both. By the way, if you are unfamiliar with trading options, specifically long options in this particular case, One of the ways that you might get more proficient at that is if you join Connie Hill for the webcast that she teaches, and I'll let her put the link out here. She teaches a webcast on long options, trading long options, which would also go along with what Sim Architect was saying in terms of creating that strangle trade, buying an option one way, buying an option the other way, expecting a move either up or down, doesn't matter. It just has to overcome the cost of those two positions. So Philip says, well, wait a second, should we be shooting for a strike price at 235? If we're going long an option, then 235, if the option has to get all the way up to 235 before it starts adding intrinsic value, that's probably not the most efficient trade, right? Because we need to see a big long move, and it would have to happen pretty quickly. This we're expecting to maybe happen over the course of the next month or so. So if we were going to trade this as an option based on this idea, let's trade it as a stock first. So put a pin in the option for just a second, but let's trade it as a stock first. And we're going to shoot for that 235 potential target, kind of in between the fib target and the drawn line, the arbitrarily drawn line target. So we're going to shoot for that 235. Okay. So we're going to trade this as a stock in this particular case. So let's do this. Let's right click, and we're going to create this as a one cancels, or actually as a buy custom with OCO bracket. So I'm going to do two things here in this discussion, right? I'm going to determine where I'm going to get into the trade. So I'm going to go ahead and get into the trade right now. Stock's currently trading at 206.27, and we're going to give this a limit that's going to be a little bit more than that. We're going to go up to 206. I'm going to go up to 206.30 as my potential limit price. That simply says, hey, get in as long as I can get in at 206.30 or less. Great. So it's already moving. We're okay with that, right? We're going to leave that good till canceled, because if we put that order out there and we're within that limit area, then it's likely that this order is going to get filled. Not a guarantee by any means. But then we're going to look at that target up here around 235. So we're going to say, all right, exit if this goes up to 235. And we're going to make that one good till canceled, so we don't need to recreate that every time. Then what we're going to do is we're going to say, look, I want to get out of this trade if this trade goes against me. So how would we know that it's gone against us? Well, it might break that support level. So that support level is coming in here. For easy math, I'm going to call that support level at 200. So I'm going to go over here to my, I'm going to change this up to my calculator. And so we're going to go 200 minus 2%. I'm going through the math just so you can see it. 200 minus 2% is 196. So we're going to put that stop. I'm going to detune it just a little bit under that 196. So I'm going to call it 195. We'll call it 195. Whoops, 195.91. We'll call it 191. We're going to place it at a number that is a little bit different than just that big round number of 196, or 2% below 200. That way, because we know that market makers can't see this stop order, but they know what human nature is, and they know that human nature likes to round, likes to use even numbers. And so we're going to place that as kind of a weird number here. And we're going to make that good till canceled as well. Again, remember, these stops only guarantee the activation price, not the execution price. So we're going to go ahead and click on confirm and send. We're going to look at getting into the trade. Right now, stock's trading at 206.39, so we got to bump our limit price. So we got to come back and order that and change that. I'm going to open up my lock, and we'll make that limit price. While I was talking, because I was gabbing for too long here, is we've got to move that limit price a little bit out to 206.40. Then click on confirm and send. Reorder this. Now we're going to look at getting into the trade. We're going to pay attention to the alert here about the stops, which we just went through, and I'm going to put this in my trading flag patterns group, and we're going to go ahead and click on send. Boom, we're in, and now we've got that order in place to take this off. If we were to turn our show orders and trades on, you can see what we've got. There's our stop order. We're already in the trade. There's our exit order already in the trade as well. So get out if it goes up there, get out if it goes there. That's one way to trade this, right? That's trading it with the stock itself. I'm going to kill those orders and take those off just so that they're not cluttering this up. And let me come back and let's take off we've got trades off of there and orders off of there. Okay, so now let's trade this as an option trade. Okay, let's trade this as an option trade and see how this might differ a little bit. To go back to Philip's question, I love the question. So let's close down this left-hand side a little bit. Let's go to the trade tab and let's say, look, we know that this is likely to take about a month or so to make that move out to that target just based on the symmetry of time. And so what we're going to do is we're going to go out about a month and we're going to add another month to that. So, or thereabouts. So I'm going to put this trade out to just about the 17 Jan, maybe not all the way to the 21 Feb expiration. That's 87 days. That's going to maybe add a little bit too much, although we can, it's just going to be more expensive. So we're going to go to the 17 Jan expiration. And so the question that Philip asked was, wait a second, if our target's out here at 235, shouldn't we just buy that 235, right? Because that was our target, right? We looked at the price, 235 out there. But see, that price, that order's not, or that particular option, the 235, is not going to add intrinsic value until it gets to 235. So here's what I would rather do in this scenario as a long option trader, if we were just going to trade this as a long option, okay, is I'm going to go to an option that maybe has a little bit of intrinsic value, meaning it's in the money a little bit. It has a greater delta sensitivity, because remember, delta is the option Greek that shows the sensitivity of the option premium to price movement. So if we're expecting price movement, and we're expecting price movement pretty quickly, then maybe a trader in that scenario might be benefited by buying an option that's a little more sensitive to directional price movement. So we're going to buy this one, say maybe the 200 strike, right? It's going to be more expensive, but it's a heck of a lot less than the influence of or the buying the stock itself, right? We paid a little over 20,000 for those 100 shares of the stock. Now, I don't have Vega in here, Agrabah. That's probability of being in the money. So I'm going to change that theoretical to Vega. So now we're going to make that, there's the 200 strike. It's got a relatively high Vega. It's fairly far away from expiration. But remember, what's going to happen to Vega as we get closer to expiration? Vega gets smaller as we get closer to expiration. Theta, on the other hand, gets bigger. So what we want to have happen is implied volatility to be relatively low, which it is, and getting higher, which it is, because we've got an earnings announcement over the horizon here in a few weeks for Amazon. So we're going to buy that option with the expectation being the price of the stock is going to move higher. That's going to benefit our long call option here in this particular case. So we're going to click on that order, and we're going to say, fine, we're going to buy this, and our expectation is that the price of the stock is going to move, right? Now, we could put conditional orders on this, but I'm going to leave that to Connie in her trading long options class to talk about how we might set up conditional orders for long call options or long put options. In this case, a long call option. And I'm going to go ahead and I'm going to click on send. We're going to read through this order, and you can see the power of leverage here. That this trade to control or to buy 100 shares to buy a contract that reflects the right to buy 100 shares is going to cost me $1,275. So theoretical maximum loss here in this particular case, a lot less than the theoretical maximum loss of buying the stock. And the theoretical maximum profit is the same because the price of the stock could theoretically go up higher. Now, we could do a spread trade. I mean, this is relatively expensive, but in the context of what we were willing to invest in the option itself, yeah, or in the stock itself, not as much. So we could buy a spread trade. We could do a long call vertical. By the way, I teach a webcast on Thursdays on long vertical spreads, and that's something that we could do. I'm not going to be here on Thursday because in this particular case, it's Thanksgiving, so I won't be here teaching that on Thanksgiving, right? All right, so now we could do a long call vertical here, absolutely, and that would reduce some of that cost. So let's pop this in. We're going to go ahead and click on confirm and send here. And we're going to read through this order, make sure that we're aware of that. We're going to go ahead and click on send. You could do a synthetic long, which would be buying a long stock or the long call and buying a put at the same time and creating a synthetic long stock position. Lots of things that you can do. By the way, guess what? Tomorrow I'm going to do something. I'm going to be teaching a class tomorrow afternoon called Choosing an Option Strategy. We can go through all of those discussions. All right. Yeah, Agrippa, good question. So if Vega is really high, does direction really matter? And the answer to that question is yeah, it does, because your delta almost always is going to be higher than your Vega sensitivity, right? Direct delta almost always going to be higher than that Vega number, and generally higher than theta. So generally long options are more sensitive directionally than anything else. Not always, doesn't always happen that way, but generally those are always going to be more sensitive. So we've traded Amazon two ways in this particular case. So the other thing that I wanted to do is I wanted to kind of go around the horn here, and I wanted to look at a couple of different stocks. I thought this might be interesting to do, given the fact that it is just before Thanksgiving. So I'm going to pop over here to my charts again really quickly now that we've done that bull flag trade two different ways. And thank you for that opportunity to put that example in here. But I wanted to take a look at a couple of different stocks that might be presenting us with some potential flags, given the fact that it is ahead of Thanksgiving. So I'm going to go to this one, TSN. This is Tyson Foods. And this was kind of interesting. The reason I kind of settled on this is for this reason right here. I happen to notice a particular pattern that exists in Tyson Foods. Now, by the way, Tyson produces turkey as well as other processed meats. But I don't know if you noticed this particular pattern that existed. Now, it's related to a flag pattern. And in fact, there is a flag pattern here. But I wanted to see if you saw the same pattern that I saw in this particular chart. I'm gonna draw in that flag. We're gonna kind of draw in that flag right here. And what I'm seeing in relationship to where this price was is something that looks a little bit like this. We kind of have the body of this pattern right here. And we got kind of something a little interesting going on. I don't know if you're noticing this pattern or not. But this is what I was kind of seeing with this flag pattern, is we're seeing a little bit of a turkey flag pattern there. And I tell you, it's the strangest thing, because every single year, this time of year, some stock shows up with this particular pattern. I don't know what it is. It's done it every year that I've been trading. It's done every year that I've been doing technical analysis. I've been able to find a flag pattern on some of these stocks. And so here we have, or this turkey pattern on some of these stocks. So here we have that famous turkey pattern on Tyson Foods. So how do we trade that? Well, nobody's laughing, for crying out loud. This is wow. There we go. Thank you very much. Okay, here's what we're gonna do. We're gonna pop this back out here, and we're gonna take a look at the flag pattern that actually exists here on this stock, which really is kind of this move right here out of this little squeeze. So we know that flags can also be pennants, right? There's the pennant. There's the flagpole in this particular case. We see that move, and it's starting to bounce. Now, do we have an entry yet? No, we don't. We don't have, and I went to the same kindergarten, absolutely. There you go. We don't have an entry yet, but we can define where our entry is in terms of getting into this particular trade. We can say if price breaks above this triangle, breaks out of this triangle, breaks out of that flag pattern, right? Yes, thank you, Connie. Is this a real pattern? Oh, that's great. So what I'm going to do is I'm going to put my cursor right here at that 6418, which would be the breakout of that diagonal. I'm going to right click, and I'm going to create a buy custom with OCO bracket. And we're going to put this order in. So we're going to say, look, Let's trade it back up to the high here, or back up to this high at 67. We'll call it 67 just for easy math. We'll put that up there. And we'll look at exiting this trade if it goes against us below this 62.85. So now we know the circumstances of this particular trade. We're going to get in if it goes above 64. What did we say? 64.18. So we're going to put this in as a buy stop once again. Buy stop again doesn't define the execution price, just the activation price. So we're going to say it activates at 64.18. Get in if it goes above that level. We'll leave that good till canceled so that if it breaks out, great. And we'll get out if it goes up to 67. And we'll make that one good till canceled. And then we'll get out if it breaks down below the flag, which is 62.74. We'll call it 62.74, 62.74 as our exit. And we'll make that a stop as well and good till canceled. And now we've got that pattern, this kind of pennant pattern defining our entry into the trade. Break out of the pennant in the bullish direction, into the trade, break down below the pennant if we're already in, then we get back out and we're trading it back up towards the top. So this is going to be a fairly short-term trade, but we're going to take it to the top of the tail of this turkey right here in this particular case. Not a recommendation, simply an illustrative example on that breakout of the pattern. And we're going to go ahead and click on confirm and send, read through this order and make sure that we're aware of those stop orders and the limitations of the stop orders. And we're going to put that in the trading flag patterns. And we're going to go ahead and we're going to click on send. Yeah, the break of the beak will determine the result of the trade. Exactly right, high speed. Yeah, if this breaks to the upside. So guys, I'll tell you what. I mean, we could continue with Campbell's soup, and we could continue with, Kraft. We could continue with Dole. We could continue with, a number of these trades in terms of different food patterns. But I tell you what, I think this is a pretty good smorgasbord at the moment with these trades. Yeah, flagpoles are not turkey necks. They could be turkey necks. But guys, here's the thing. If you want to learn more about trading flag patterns, if you want to learn more about this particular type of perspective, what I'm going to encourage you to do is come on over here to the Trader Talks webcast channel and to Schwab Coaching. And if you want to put in here flag patterns, and now you've got a bunch of webcasts. Look, there's one, if it looks like a flag, the art of flag patterns. And you've got a bunch of webcasts in there that talk about flag patterns. Right, I don't have good till canceled on the buy order because if it doesn't happen today, it may not happen at all. So we're going to just leave that in place for today. Good catch there, Robert, and I appreciate you doing that. By the way, really quickly, I'm going to pop over here to Schwab Coaching and go to in-person events. So if you have the ability to travel between now and Christmas time, we're going to be in Orlando next week, Friday and Saturday, December 6th and 7th. We're going to be doing a 2-day workshop. Now, there are still a few spaces left, not very many. So you may need to either send an email or get in touch with a financial consultant at a branch to try to get into these events. In any event, we're going to be in Orlando, and then we're going to be in Houston on the 13th and 14th. And then we're going to be in Dallas on the 3rd and 4th. And then we're going to be in San Diego, where it's really warm and nice in January on the 10th and 11th of January. So we look forward to seeing you at all of those events. A couple of spots left. Austin, we closed those down early, but if you want to get into either of these two events, Orlando or Houston, you can get in touch with me on X at Ben Watson CS. You can get in touch with Connie at Connie Hill CS, and get in touch with us, and we can see what we can do with those events. Guys, thanks very much for being here today. Have a great, great holiday. I hope that you travel safely. I hope that you have the opportunity to spend time with loved ones and have a wonderful, wonderful, and fulfilling holiday. Take care, everybody. We'll see you again very soon. Bye-bye.